When I think about being 25 again and starting fresh in 2026, I wouldn't engage in any exotic activities. None. Because as I've gotten older, I've realized more clearly that the path to success isn't complexity, but prudence. People assume that intelligence leads to making the right choices. But that's not true. Some of the smartest people I've known were the most vulnerable to emotional breakdowns because they developed a belief that they couldn't be wrong. Markets love to humble such individuals. As you can see, an undisciplined intelligence is like a horse racing at an uncontrolled pace. It might get you somewhere quickly, but it's usually not where you want to go. That's why you see crowds flocking to the things that are most popular in every era. Real estate investments, tech stocks, cryptocurrencies, artificial intelligence developments. The names change, but the stories remain constant. If you listen carefully, the market doesn't actually shout, it whispers. It tells you when you're overexcited, when fear becomes irrational, and when opportunities lurk beneath the surface of boredom. But most people can't hear these whispers because they're too focused on reacting to the noise. Observe people in the markets for any length of time, and you begin to see something. The average investor seeks validation, not profit. They don't want to get rich alone. They want to get along with everyone. Bubbles form for these reasons, not just through appetite, but through the comfort of the search for belonging. Social failure seems safer than individual success. But true success, lasting, quiet, and sustainable, always begins with solitude. I witnessed this firsthand during the euphoria of the 1920s. Wall Street was a theater of illusion. Taxi drivers were predicting stocks, shoeshine boys were speculating on profit margins. People thought they'd found a way to get rich easily. In fact, it was the discovery of leverage which ultimately overtook them. The crash of 1929 didn't just wipe out assets, it also dispelled illusions. The crowd, which had derided caution, was now seeking reassurance. At that moment, I learned a truth that would guide me throughout my life. In the financial world, rationality is a moral choice, not a skill. If you want to understand the difference between an investor and a speculator, look at how they cope with boredom. An investor uses boredom like a friend. They read. They work on it. They wait. A speculator, on the other hand, perceives boredom as a pain and seeks to alleviate it. They must constantly move, trade, refresh data, and feel alive. They confuse movement with progress. But in the market, meaningless movement is the most costly form of entertainment. True wealth is built slowly, and interestingly, this process often feels boring. There are no daily dramas or excitement. It's a matter of mathematics. It requires compound interest, discipline, and patience. But the crowd doesn't want mathematics. It wants excitement. And excitement is the one thing that markets sell at the highest price. Do you think people buy stocks? No. They buy stories. They buy stories about a company that will change the world. Stories about technology saving people. Stories about how they're smarter than everyone else. In reality, they're buying hope, not wealth. Hope isn't a sin. It's a basic human need. But when hope replaces analysis, it can become a trap. I've seen this happen many times. Someone convinces themselves they're investing when they're actually praying. They don't examine their balance sheet. They look at it like they're reading tea leaves. The difference between investing and gambling isn't the tools they use, but their personalities. They operate in the same markets, with the same data. But one seeks truth, the other thrills. One does thorough research, the other makes predictions. But both believe they're rational. During the Great Depression, I met a man who lost everything. He owned a lot of stocks at the peak. After the crash, he got scared and sold them all. When the market finally recovered, he was too upset to reinvest. He said to me, "The market turned its back on me." I replied, "No, the market was just testing you." You betrayed yourself. This is the most important part. The market doesn't care who you are, how much effort you put in, or how attractive your ideas seem. It's like a mirror. It reflects your behavior more accurately than anything else in the world. Patience seems counterintuitive in the short term, but it leads to wonders in the long run. Panic, on the other hand, seems like a smart short-term solution, but it's disastrous in the long run. And that tiny gap between what seems smart and what's actually smart is where so many people lose their wealth. Everyone's searching for a secret recipe, a perfect formula, a strategy that works in any environment. But I found the most effective approach to be the simplest. Buy good companies at good prices. Hold them for the long haul. Stay out of debt. Ignore the noise. And most importantly, understand what you have. That's it. Yet, for the most part, few people manage it. Because maintaining simplicity is emotionally challenging. It requires staying steady while others are zipping by. When panicked statements are heard in the newspapers, it demands that you maintain composure. It expects you to act against your instincts. It requires you to remain inactive when everything around you is pushing you forward. But that's why this method works. When everyone else is seeking excitement, the only way to stay safe is to accept the boring. When others are ambitious, you need to be analytical. When others are fearful, you need to be patient. Being smart in investing isn't about predicting, it requires preparation. Money isn't just an economic tool. It's a psychological mirror. How an individual uses money reveals almost everything about their character. Patience, humility, foresight, even kindness. A person who spends impulsively is often undisciplined in other areas. A person who saves purposefully is careful in every aspect of their life. The habits of someone who is financially sound also lead to emotional stability. From this perspective, investing is more about self-discipline than about the markets. The biggest threat isn't usually inflation, recession, or interest rates. The person in the mirror is the one who can't stop, can't delay gratification, and mistakes noise for information. So I always tell my students, the investor's primary goal isn't to make money, but to maintain character. Everyone touts compound interest as the eighth wonder of the world, but I think this is misunderstood. Compound interest isn't a financial trap, it's an ethical principle shrouded in mathematics. It rewards consistency over intelligence, time over timing, and patience over perfection. Every dollar, every decision, every disciplined day accumulates silently and invisibly. Results don't appear in a month, they unfold over years. That's why compound interest only works for those who can wait. Everyone wants to see results right now, but compound interest whispers, wait. And those who can't wait abandon their own success stories. Wealth without wisdom is just noise. Wisdom without wealth brings peace. But the combination of both, that is true freedom. I'm not talking about fuel and champagne, but about freedom of mind. The ability to say no to trivial things. The peace that comes from being free of hysteria. And the clarity that comes from understanding that the purpose of money is not just more money, but independence. True wealth is quiet. It doesn't try to show off on social media or manipulate the markets. It waits peacefully, knowing that compound interest, like time, will do its job. So, if I could whisper one thing to every young investor today, it would be this. Don't seek excitement. Seek endurance. Don't chase trends. Seek truth. And always remember, the market is not your enemy. Your impulses are. When I started teaching, most of my students were looking for shortcuts. They were after charts, formulas, secrets, anything that promised certainty. But the market doesn't reward certainty. It rewards adaptability. The smartest investors aren't those who know everything, but those humble people who continue to acquire knowledge even after they think they know it. Knowledge quickly becomes obsolete. Character, however, endures. Therefore, discipline will always outlast wisdom. In 1934, when we published Security Analysis, the world was still recovering from the Great Depression. We didn't create value investing to be smart. We developed it to survive. The idea was simple. Buy a dollar for 50 cents and have the courage to wait for others to take notice. It was never intended to become a fad. That's why it remains so influential. Every generation rediscovers the same fallacy, as if someone had developed a system that essentially eliminates risk. They give it new names: structured products, quantitative models, decentralized finance. But risk doesn't disappear, it's just hidden. And when it's too well hidden, it rears its head. Speculation feels smart because it offers action. Investing feels suspicious because it requires patience. And yet, history shows that action doesn't make progress. Patience is the real progress. The hardest thing about value investing isn't the math. It's the loneliness. Before you look smart, you often look foolish for a very long time. If you can't stand it, the market detects your weakness and exploits it. Patience is often undervalued because it can't be measured. There are no charts to measure discipline or algorithms to capture constraints. Yet, these invisible virtues influence almost every visible outcome. A portfolio based on reason ultimately outperforms a portfolio based on emotion. This isn't because the mind is smarter, but because it can endure longer. Compound interest doesn't require intelligence, it takes time. The market rewards composure and punishes reactivity over many years. In a world of instant results, remaining patient is an act of defiance. It's also a sign of wisdom. Most people think losses hurt because of money. This isn't true. Losses hurt because of identity. We associate our self-worth with our results, and when the numbers drop, our self-confidence plummets. But markets don't judge your intelligence. They simply test your resilience. The question isn't, how much can you make? The question is, how much discomfort can you endure without losing your mind? I once told a student, if you can stay sane when the crowd is panicking, you won't just make money, you'll master yourself. That's the real dividend. In today's world, information spreads faster than ever before. But wisdom hasn't increased at this rate. The problem isn't a lack of data. It's an abundance of distractions. Every headline creates a sense of urgency. Every chart predicts the future. So people react, trade, and mistake it for intelligence. But an investor's advantage isn't always speed, it's clarity. While everyone else is lost in the flow of information, you win when you remain selective. The best investors are curators, not collectors. They don't get caught up in every trend. They filter meticulously. They know that in the long run, noise is an inflation of the mind. It depletes first focus, then judgment, and finally capital. I've met two kinds of rich people. One is rich in peace. The other is rich without peace. The difference isn't in the size of their assets, but in the quality of their relationship with uncertainty. If your happiness is tied to a rising chart, you're building your life on a fragile foundation. Peace arises not from perfect timing, but from a sufficient profit margin. Margin of safety isn't just a financial concept, it's a philosophy of life. Allow room for error. Be prepared for the unexpected. Accept that you won't always be right, and design your life so you don't have to be. This is true security. Success in the markets should be measured not just by profit, but by how you behave under pressure. Anyone can appear successful when prices are rising. Character is revealed when prices are falling. The ultimate goal isn't to triumph over the market. It's to avoid becoming an emotional, psychological, and spiritual victim. Reaching a point where market fluctuations no longer overwhelm your inner peace is true wealth. Because when you seek the market's approval, you relinquish your independence. And independence isn't just abundant profit, it's the true dividend of wisdom. I'd like to say this to a young investor in 2026. Don't waste your energy chasing what others appreciate today. By the time the crowd recognizes a good idea, it's too late. The owners of the future are not those who make a splash, but those who prepare quietly. History should be studied for humility, not nostalgia. Every new era has ended similarly. First excitement, then regret. Names change, habits persist. It's impossible to predict the future, but you can protect yourself from your worst instincts. Even this is enough to establish lasting success. Ultimately, investing, like life, rewards character more than intelligence. Markets are merely mirrors reflecting back to us. If you seek truth, you'll find patience. If you seek excitement, you'll find trouble. If you seek understanding, you'll find freedom. The most qualified investor isn't the one who always makes the right predictions, but the one who acts intelligently when their predictions go awry. Because in the end, they all come true. Therefore, when you feel lost in the chaos, here's what you need to remember. The world will always be full of drama, but true, lasting, and peaceful wealth belongs to those who act rationally rather than rashly. I used to think that reason was a natural trait, that people would act rationally when faced with reality. Time has taught me the opposite. Logic is learned, while emotion is genetic. People gravitate toward what's reliable, not the truth. They seek confirmation over information. For this reason, markets are often emotional mechanisms disguised as mathematical. When you own a stock, you're not buying just numbers. You're buying a story, a belief, and a visualization. And dreams, by their very nature, don't conform to numerical values. That's why I stopped trying to outsmart the market and chose to wait. Because while reason doesn't always bring quick victory, it does eventually. Every investor faces two distinct markets. The external market, awash with prices, news, and opinions, and the internal market, a market brimming with fear, greed, and pride. It's possible to study the external market, but you must master the internal market. I've witnessed talented analysts driven by their own instincts. They buy because of their ego, sell because of their fear, and wait because of their hope. They knew the right answers, but they couldn't take action. Your personality matters more than your skill. It's the deciding factor in which direction you advance knowledge. Will wisdom or arrogance prevail? Therefore, self-control is the rarest form of intelligence, because it requires surpassing yourself before the world can test you. Humility isn't about questioning yourself. It means self-awareness. It's about accepting that markets are stronger than you, that luck plays a significant role, and that certainty is, in fact, a myth. Humility doesn't diminish your self-confidence. It cleanses it. Every great investor I've ever known operated under this common habit. They acted with the assumption that they were fallible, not out of disbelief, but out of respect for the truth. When you allow mistakes, you survive. When you object, you face disaster. This isn't a matter of pessimism, it's a matter of mathematics. People seek control in a world of resistance. They chart prices, forecast trends, and develop new models. All efforts to create the illusion that they can control the future. But the market isn't a puzzle to be solved. It's a living entity, unpredictable, emotional, and sometimes logical. The more you try to control it, the more it will drag you down. But when you align with its nature, patient in chaotic moments, calm in exuberant times, it will secretly reward you. Here's the paradox of wisdom. The moment you give up the illusion of control, you're actually in control. After spending half a century in finance, I've observed that wealth is often misunderstood. Most people think it means freedom from worry. But true wealth is the freedom to choose what is valuable. After a certain point, money becomes less useful and takes on a symbolic meaning. It stops solving problems and instead complicates them. It is a building block for character, no matter what it is. A wise investor views money as a tool, not an identity. Because when money becomes your identity, you lose your clear vision. You tend to protect your ego rather than protect your capital. True prosperity is measured not by assets, but by peace. And peace only emerges from the alignment between your principles and your actions. Every portfolio needs two essential components: growing assets and protective principles. The first helps you sustain your life. The second allows you to thrive. Success without integrity only creates noise. Impatience makes opportunities seem illusory. A lack of humility turns intelligence into arrogance. I have always believed that sound investing is simply ethics applied. You buy with discipline, wait with faith, and sell with wisdom. You act not when others are panicking, but because you value the moment when your analysis, your truth, reflects. This isn't just about financial matters. It's another form of philosophy. Independent thinking is difficult. When everyone agrees, not literally, but in a shared opinion, you're left alone. If you refuse to follow the crowd, you not only suffer financial losses, but also risk being rejected. You'll be ridiculed, questioned, and ignored. But this is the price of clarity. I've had moments of profound self-examination. While others celebrated, I remained cautious. While others were fearful, I tried to remain patient. And that patience often feels alienating. But eventually, the truth emerges. And when it returns, it rewards those who endure silence. If I could write something to tomorrow's investor, one who is preparing to face a faster, louder, and more distracting environment, I would say this: technologies evolve. Human nature remains constant. Algorithms don't protect you from anxiety. Artificial intelligence doesn't teach you humility. And no innovation can eliminate greed. So learn history, study behavior, and create systems that protect you. Because, ultimately, markets don't destroy wealth. People do, through haste, arrogance, and denial. You don't have to beat everyone. You just have to outlast most. Sometimes I wonder what will remain of this process: the charts, the models, the lessons. But maybe that's not so important. Because an investor's true legacy isn't built on returns, but on limitations. Every choice you don't make, every impulse you control, and every moment you remain calm. These are the hidden victories that become wisdom. If future generations will remember anything, it's this: markets reward the rational, but life rewards the intelligent. Don't let the pursuit of one diminish the value of the other. After all, the richest life is the one that is at peace with itself. Being at peace with oneself. The previous section ended here, and truly, the only ending that matters. No matter how far you go in finance, business, or life, the question remains: when will you know you're enough? Most people never grasp this. They think they can achieve an infinite goal by pursuing limitless growth. But being enough is more of a mindset than a number. Being enough is the moment when you no longer need more to prove your worth. When your time becomes more valuable than your returns, and your happiness is no longer dependent on future success. The world can't teach this. The world teaches how to save. Wisdom, on the other hand, teaches you how to choose what to keep and what to let go. Everyone talks about the growth of money. Few talk about character development. Every honest choice, every patient decision, and every moment you act with integrity. These things grow exponentially. They may not show up in your bank account, but they show up in your inner peace. Over time, principles become habits, and habits become identity. You start making better choices not because you try harder, but because you're someone who doesn't betray yourself. That's the biggest payoff. Not wealth, but harmony. Not profit, but peace. When I was young, I thought the market was out there, made up of numbers, ideas, and opportunities. Now I realize the market is always in there. The real market is in the human soul. It oscillates between fear and hope, greed and gratitude. If you balance this internal market, no amount of analysis will give you confidence. You can't find confidence by searching externally. It only comes from clarity, from knowing who you are, what you care about, and what you're unwilling to compromise on. This is your internal balance sheet, the balance sheet that defines your true net worth. Patience is the rarest skill because it appears to do nothing. But in reality, it's the quietest form of confidence. Every investor learns this through experience. The market rewards those who can delay gratification, but life rewards those who can wait without losing their purpose. Waiting isn't a weakness. It's a sign of discipline concealed in serenity. It's more important to trust the process than to pressure. When you finally learn patience, you stop reacting and start responding. You stop chasing moments and start integrating meaning. I used to be afraid of mistakes. I'm now afraid of stagnation. Because mistakes show you're taking action, they show you're interacting with reality. But stagnation means a quiet collapse. The best investors I've ever interviewed all had one thing in common. They learned from their failures faster. Every loss was a lesson. Every challenge is a price paid for the wisdom gained. If you can learn from failures, it shows you're ahead of most people. Because resilience is built not through victory, but through disappointment. I once taught investing using ratios and formulas. Now, if I had the opportunity to teach again, I would start differently. Before teaching the price-to-earnings ratio, I would introduce patience. Before analyzing the market, I would cultivate self-awareness. And before addressing greed, I would teach humility. Because data can change, but human nature never changes. Unless you know yourself, no system can save you. You don't need to master every chart. You need to be able to manage your reactions. This is a teaching method that will always be valid. At some point, wisdom chooses silence. Not because there's nothing left to say, but because enough has been said. The older I get, the more I cherish silence. It carries fullness, not sadness. Thoughts overflow with gratitude and understanding. While the market becomes fleeting, true serenity lies within. When you feel this serenity, you've attained something money can't buy: perspective. Perspective transforms ambition into appreciation. It replaces urgency with understanding. It allows you to achieve success without moving. It's not just a talent. It's a process of spiritual growth. If I were 25 again in 2026, I wouldn't be chasing the next big thing. Instead, I would constantly seek consistency. I would focus on the discipline of maintaining peace in an environment where others are consumed by noise. I would create systems to protect myself. And I would remind myself daily that no spreadsheet can measure my peace. Because the greatest investment you can make is in your own character. Everything else, returns, recognition, reputation, will come naturally. One day, the charts will disappear. The signs will change. The portfolios will be forgotten. But the values you embrace, honesty, patience, humility, are enduring beyond repayment. They become invisible compasses for the next generation. And if even one person learns from your example that peace is more valuable than profit, then you have achieved lasting success. Because success isn't about being remembered. It's about living a lifestyle that demands remembering. The richest life isn't measured in years or money. It's measured with clarity. It's the moment you can look at yourself, the markets, and the world and say, I am enough. And when you reach that point, your chasing the car ends. But the time for peace begins.